Greetings, members, one and all of the Salivation Nation. What will happen to gold prices and even silver when the Fed cuts rates next week? Let's find out. That's the question being asked here on this Kitco.com article, and most of us probably agree that the rate cut is pretty much already priced in for the precious metal prices. But the question asked is what will actually happen to the gold price once the central bank makes those cuts for the third time this year. This is a very interesting read here. Analysts sounded positive as gold's new technical momentum took prices temporarily to $1,520 an ounce, hitting a 2-week high. Since then, prices retreated, but not below the key psychological $15 an ounce level. Although we saw it go below $1,500 an ounce, unless you're talking about within the 2 weeks, it did go below that $1,500 an ounce. The article goes on to say you have demand now from momentum traders. We have options expirations on Monday on the COMEX, and the author talks about the fact that price makes the news. Prices got the attention of global traders. We're going to lose a lot of open interest from short covering, RBC Wealth Management Managing Director George Garrow told Kitco News on Friday. Chart-based buying was giving prices a boost. Kitco senior analyst Jim Wyckoff pointed out, both gold and silver have seen their near-term technical postures improve markedly this week, especially with silver going above $18 an ounce. Near-term price downtrends in the daily charts were negated, which is inviting chart-based buyers into the markets, Wyckoff said. Also, weaker economic data has helped gold move above $1,500 an ounce as traders were starting to price in more cuts as they worried about slower economic growth. We bounced off the 1480 level, which has been a bit of the support recently. We continue to see weaker economic data from the U.S. in particular, and this has helped strengthen the case for a cut next week, said TD Securities commodity strategist Ryan McKay. Blue Line Futures President Bill Baruch described Friday's move up as very technical in nature. The market could go lower. The profile was exhausted to the downside, and the bears could not do anything. We are seeing moves above technical levels that are gathering additional tailwinds, Baruch said. I've been upbeat on longer-term gold. Earlier this week, we've gone bullish in the near term as well. So it really does feel this is a technical move, not really dependent on psychological or other factors that could come into play here. It is advisable to get a bit more defensive in your portfolio, said RGO Futures senior market strategist Philip Strebel. Fresh weak economic data is really increasing expectations that the Fed is going to do that cut next week. Weaker durable goods versus expectations for the second month in a row got traders scratching their heads about the health of the economy, Strebel said. We also saw weaker data come out of tech stocks, which is a big growth sector. Those kind of concerns really got people slightly worried. And that seems to be the case. There's a lot of different factors that play into these prices and the health of the economy. For quite a while, we've seen a lot of positive data with regards to unemployment, higher wages, which are two of the biggest factors in terms of GDP and spending and the like, and consumer confidence. All those things are up. But then you get other things like some of these weak economic data, things like the bond markets, and other factors that come into play that put a damper on it. Now many are eyeing the 1525 level, and I mentioned this in yesterday's video, as the key resistance that the yellow metal needs to break to move significantly higher. Gold has to get above $1,525, and then we can clear the way. If we can close the month anywhere near 1550, those expectations of the $1,600 year-end target actually have a chance, Strebel said. That's right. And you talk about that moving the road way to $1,700 gold as well too. Now, on the other hand, is the Fed might disappoint with a more hawkish tone. The Federal Reserve announcement on Wednesday is the key event to watch next week, according to analysts who are cautious that the market might be expecting an unrealistically dovish tone from the central bank's chair, Jerome Powell. In the last couple of days, the hawkish Pence speech and the weaker U.S. data, markets are getting more convinced that Powell will strike a dovish tone in the next meeting, said McKay, but this might be a little premature. We are skeptical that Powell is going to signal more cuts after a cut next week. The Fed is likely to put rate cuts on pause for at least a near term to assess the impact of the potential 3 cuts they do this year. Lack of dovishness from Powell could weigh on gold next week as markets are disappointed, McKay added. Also, the Fed's rate cut has largely been priced in by the gold market, and I believe that is the case, which means that any hawkish hints could push gold lower, Burris pointed out. What matters is the narrative they speak of and how they plan on moving forward. So it's not so much that they cut, but future cuts. Will they be as dovish as the markets are anticipating? Also, don't underestimate Brexit and the U.S.-China talks. That's right. Brexit now has an extension to January of 2020. At the time of this writing, the markets are estimating a 93.5% chance of a 25 basis point cut, according to the CME Fed Watch tool. So here's some other data to watch for next week. The macro releases Friday U.S. unemployment data or employment data, which is estimated to show that an additional 90,000 jobs have been created in October. Another important data set will be the preliminary third quarter GDP figure on Wednesday, which is projected to come in at 1.7%. And so, yeah, we need to get that up to over 3%. That is a little bit concerning, for sure. Once that number goes below for 3 consecutive quarters below 0, then we are definitely in a recession. Other items to keep a close eye on are CB Consumer Confidence Report and U.S. pending home sales on Tuesday, as well as personal spending on Thursday, and ISM Manufacturing PMI on Friday. So a lot of different factors there. Consumer confidence, a dollar index, GDP numbers, all that stuff plays in a part. But what's missing from this piece here is, we know that the price is pretty much baked in for a Fed rate cut. However, Jerome Powell's speech, his press conference is going to be the deciding factor as to what really happens. I posted a video quite a while ago from the last Fed chair, Janet Yellen, how 1 or 2 words just move the metals. And that very well could happen again here with Jerome Powell, depending on what he says. If he says that the economy is very healthy and this is just a sign or another way to kind of help move the economy along, just give it a little tiny little gentle nudge, well, it could be that it doesn't have any effect or the gold could go down. However, they're saying that he's concerned and that they are thinking about more rate cuts. Well, then I think that kind of language will mean that they will react even more so past the baked in thing that we've seen here. And I think that's what's missing here from this piece. And that is, it all depends. The answer to this question, what happens to the gold price when the Fed cuts rates next week, it all depends on what Jerome Powell says. That's right. And that's the psychological element. That's something that really cannot be analyzed with technical analysis or technical moves based off what they are talking about here. The move upward was a technical boost there. So we'll see how it plays out. It will be very interesting to see where we go next week with this information. Again, I'll remind you that a lot of economists have not predicted any kind of downward movement or actual recession in 2019, but that it may come in 2020 or maybe even 2021. However, we could be in the midst of it and not really know it because some of these numbers get revised downwards or upwards depending on the data and the movement. But sentiment. There's a lot of concern out there for sure, but some of the biggest numbers are indicating that the economy is still doing well. And I do think that regardless of what you and I feel about the Fed and what they have to say, most of us are kind of, we're not really, it's obvious they want to try to give the indication the economy is doing well. And so when they do say something negative about the economy, well, that means that we should be probably more concerned than what is mentioned there, and that's what's going to move the prices up. So we're kind of skeptical about what comes out of the Fed in terms of what they say, but regardless, it does have an effect, and it will have an effect on not only the prices of gold and silver, but where the dollar index goes. Faith in that dollar. And that is something that will continue, and will continue to be watched as time goes. Will there be cracks in it in the coming future? I believe with each bill they print and each thing that we do that accounts to stimulus or quantitative easing or that type of thing, or involvement in an entity into the natural free market, I believe that is going to not bode so well for the dollar, and therefore really bolster gold and silver as time moves forward. We'll find out. It'll be an interesting thing to watch. There you go. There you have it. So post your thoughts about this article and about what you think about my analysis, that I think it's going to boil down to what Jerome Powell says in his press conference. And let me know what you think about the future of where gold will lie down the road based off of what the Fed does and based off what the economy is going forward. We'd like to extend a multitude of gratitude to you all for watching and remind you that I do post videos daily. I hope you will come back and check, even if you don't get a notification or by email or what have you, or even your subscription feed. I want to encourage you all to please rate, share, comment, and subscribe.